Hi everyone, my name is Lady Kate Vidinoy, and today I'm going to tackle about the topic of recording closing entry. Closing entries are journal entries made at the end of an accounting period to close out the balances of revenue, expense, withdrawal, or divided accounts. The purpose of closing entries is to reset the temporary accounts to zero and transfer their balances to retain earnings account or owner's equity accounts. In other words, a journal entry is made at the end of the accounting period. The closing entry is used to transfer data in the temporary accounts to permanent balance sheet or income statements account. The purpose of closing entry is to bring temporary journal accounts balances to zero for the next accounting period, which aids is keeping two accounts reconciled. And it is important as well all other journal entries. The closing entries are posted in general ledger. After all closing entries have been finished, only the permanent balance sheet and income statement accounts will have balance that are zeroed. For example, revenue, divided, or expense accounts are temporary accounts that used to be zeroed off and the balance transferred to the permanent account.
The clearing of accounting process, recording closing entry. So when we say closing entries, it is our journal entries that made at the end of an accounting period to close out the balances of revenue, expense, and withdrawal dividend accounts. The purpose of closing entries is to reset the temporary accounts to zero and transfer their balances to the retained earnings account or owner's equity account. So here are the general overview of the steps involved in the clearing or closing process. The first one is identify temporary accounts. It means these is the accounts include revenue accounts, expense accounts, and the withdrawal or dividend account. These accounts are not carried forward to the next accounting period and are closed at the end of each period. So, it is a nominal account that begins with a zero balance at the start of the financial year and the balance is visible in the income statement. The next one is closing revenue accounts. It means debit each revenue accounts for its balance and credit the income summary account for the same amount. This transfer effectively closes out the revenue accounts. So this is the first step of closing entries. It means to make the balance zero. We see from the adjusted trial balance that our revenue accounts have a credit balance. To make them zero, we want to decrease the balance or do the opposite. We will debit the revenue accounts and credit the income summary account. The next one is close expense account. Close expense account, it means this account is for its balance and debit the income summary account for the same amount. This transfer closes out the expense account. So the transfer of the debit balances in a company's expense account to the income summary. This includes expenses in the account such as rent, interest, and salary. Accountants transfer these funds by crediting the expense accounted and debiting the income summary. So this is Shane Ranchi P. Nuevo reporting the recording closing entry. That's all. Thank you.
Hi, everything. Close income summary account. If there is a net income, debit in the income summary account for the total and credit the retained earnings or owner's equity account. If there is a net loss, the entries are reversed. credit income summary, and debit retained earnings. So, the income summary account is used to summarize the net income or net loss for the period. If there is a net income, the debit, the income summary account for the total amount credit retained or owner's equity account. This transfer increases the retained earnings or owner's equity. By the net income, conversely, if there is a net loss, the entries are reversed. You credit the income summary account and debit the retained earnings or owner's equity account. This decreases the retained earnings or owner's equity. By the net loss amount, close withdrawal dividend account. Debit the retained earnings or owner's equity account for the amount of any withdrawals or dividends and credit the withdrawal dividend account. This transfer closes out the withdrawal dividend account. So, if the business has any withdrawals or dividends, these amounts need to be closed out as well. The withdrawal or dividend account is debited for the total amount, and the retained earnings or owner's equity account is credited. This transfer decreases the retained earnings or owner's equity by the amount of the withdrawals or dividend. Verify balances. At this point, all temporary accounts should have a balance of 0. The retained earnings or owner's equity account should reflect the net income or net loss for the period. So, after recording the closing entries, you should check that all temporary accounts have 0 balance. The retained earnings or owner's equity account should reflect the net income or net loss for the period. The purpose of this verification is to ensure that all temporary accounts have been properly closed and the financial statements are ready for the next account period. It's worth noting that the closing entries are typically recorded in the general journal and then posted to the respective ledger accounts. The specific accounts used and the amounts involved will depend on the individual company transaction and chart accounts. Remember, it's always best to consult with a professional accountant or refer to your company's accountant policies to ensure accurate and appropriate recording of closing entries for your specification situation. These steps effectively transfer the balances of temporary accounts to the appropriate permanent accounts and reset the temporary accounts to 0. The books are then ready for the next accounting period. That's all. I'm Mylene Joyce Nemenso, by the way.
Good morning. My name is Antoinette Pangalay and I am going to tackle about preparing post-closing trial balance. So, what is a post-closing trial balance? A post-closing trial balance is a listing of all balance sheet accounts containing non-zero balances at the end of the reporting period. The post-closing trial balance is used to verify that the total of all debit balances equals the total of all credit balances, which should net to 0. So, in some cases, the post-closing trial balance contains no revenue, expenses, gain or loss or summary account balances, since these temporary accounts have already been closed and their balances moved into the retained earnings account as part of the closing process. So, for example, once the account has ensured that the total of all credits and that the total of all debits and credits in the report are the same number, The next step is to set a flag, or else to prevent additional transactions from being recorded in the old accounting period. So, in begin recording account transactions for the next accounting period. So, mao ni siya ang last step sa period end closing process. If any revenue, expenses, or gain or loss, or summary account balances appear in the trial balance subsequent to the closing process, it is because they are associated or with the next accounting period. Another one of the post-closing trial balance is an important step in the accounting cycle, no? So, complete after closing entries, the post-closing trial balance prepares or nag-andam for your accounts for the next period. And also, this is the final trial balance prepared before the new accounting period, and it is also used to make sure that beginning balances are correct. The post closing trial balance is also used to ensure that that the debits and credits remain balanced or after closing entries have been completed. So the next one is the post-closing trial balance consists of the post-closing trial balance contains columns for the account number, account description, debit balance, and credit balance. It will likely not contain post-closing trial balance in the header, since few accounting computer system use this designation. Instead, it will use the standard of trial balance report header. So, in accounting software requires that all what do we call journal entries balance before it allows them to be posted or to the general ledger. So it is essentially impossible to have an unbalanced trial balance. So thus, the post-closing trial balance is only useful if the accountant is manually preparing accounting information. So for this reason, most procedures for closing the books do not include a step for printing or else reviewing the past closing trial balance.
Good day everyone, my name is Crystal Claire D. Noonan, and for today's video, I will be tackling about the last step in the accounting cycle. So what is the last step of the accounting cycle? The post-closing trial balance is the last step in the accounting cycle. It is prepared after all of period business transactions have been posted to the general ledger via journal entries. So what does it mean? The post-closing trial balance can only be prepared after each closing entry has been posted to the general ledger. What is the purpose of closing trial balance? The purpose of post-closing trial balance is to transfer the balances of the temporary accounts, expenses, revenues, gains, and others to retain earnings account. After the closing entries are posted, these temporary accounts will have a zero balance. The permanent balance sheet will appear on the post-closing trial balance where the balance is. When the post-closing trial balance is run, the zero balance is temporary accounts will not appear. However, all the other accounts having non-negative balances are listed, including the retained earnings account. As with the trial balance, the purpose of post-closing trial balance is to ensure that debits equal credits. Why the post-close accounting trial balance is necessary? It's because while each accounting period has a beginning and an end, the periods do use information from the previous period. That is why it is necessary to run a post-closing trial balance so that the preparation of post-closing trial balance serves as a check on the accuracy of closing process and ensures that the books are in the balance at the start of the new accounting period.
Hello, I am Gerald Mendoza from BSHM 12 evening. So today I'm going to report about the post-closing trial balance. So why do we need to uh, do a post-closing trial balance when it is already calculated? Because it might have an error. So in order to uh, make sure that it doesn't have any error, we must do a calculation again. So what is the first step is to list the account titles in numerical order. So we have already uh, uh, the balance or the ledger. So here is the ledger. So this is the ledger. So this, and we are going to get this to put it later on the uh, trial balance, post closing trial. So then after we got all the uh, debit and credit in and put it in the post closing trial balance, we will add the debt and the credit to make sure if it is in balance. So we will then compare the totals. So next is here. So yes, now that we have cash in adjusted balance in the debit side, here this is the debit side. We will put it here in the cash. So that is the cash. This that and it is, as you can see, it is put it in the debit side. So okay, so these are the headings. So heading are as post closing trial balance May 31, 2019, and account titles in numerical order. So these are the titles in a numerical order, and balances is this. Okay, so now that we got the cash, we will then get the account receivable. So this is the account receivable in the debit side, and then we will put it in the debit side. And account receivable 17,300, supplies for about 15,100, and prepaid rent for about 4,000, prepaid insurance 13,200, 420 service vehicle, office equipment 60,000. So then now we will add that. So it is, the total is 51,700. So now that we got the debit, we will now proceed to the credit. So I will just pass forward because it takes a lot of time. So accumulated depreciation service vehicle is about 4,000, and accumulated depreciation of equipment is 1,000, and PAP 1,000, 210,000, and then now that we got all of it, we will add all of this 4,000 plus 1,000 plus 210,000 plus 53,000 plus 1,800 plus 1,400. Altogether, it is 51,700. So now that is all, it is the same as the debit and the credit. It is all in balance. So there is no error in the uh, post closing trial balance. So that is all. Thank you.
So reversal balance entry. So reversing entries is an optional step in the accounting cycle. So when we say optional, pwede na to siyang agian o pwede sad nga dili. So however, it is useful in facilitating the recording of asset, liabilities, and revenues and expenses in the usual manner. So later, ato ang masabtan unsay mga importance, unsay mga advantages sa paggamit og reversing entries. So they are journalized and posted at the beginning of the new accounting period. So although ang reversing entries is last step sa accounting cycle, but once magbuhat na tag reversing entry, ato dyan na siyang himoon sa beginning of the new accounting period. So why are reversal entries needed? So reversal entries will significantly make the life of a bookkeeper easier since he won't have to remember which expenses and revenues were accrued and prepaid. So he can record the reversing entries to negate the effect of the adjusting entries that were passed in the preceding year and essentially start anew. For the current period, he would just have to record the expenses and revenue as they come in and not worry about the accrued and prepayments of the last period. So now unsa kay mahitabo if si bookkeeper is kanang wala niya na wala siya ga-record aning mga reversal entries. So do you think ma-remember to niya tanan? So katong mga portion sa mga current nga expenses, for example tong mga nabayaran na sa previous period. So di ba? So with that reversal entries the balances in these accounts may not be accurate or dili jud matumpak, which could lead to incorrect financial statements. So if incorrect ang financial statements, then therefore there is a high chance of double counting certain revenues and expenses. So double counting, balik-balik na sad nga pagbalanse ang mahitabo. Then that is why in the first place, na-practice nito sa pagbuhat og reversal entries at the beginning pa lang sa accounting cycle. So para ma-ensure nato nga malikayan ang kaning mga error sa double counting. So now there are two key benefits to making a reversal entry. So first, it significantly reduces the chances of making an error of double counting certain expenses or revenues. So again, one of the benefits if magbuhat tag reversal entry is that it reduces the chances nga masayop or ma-error ta sa pag-double counting sa ato ang expenses or revenues. Then, the other one is it will allow efficient processing of actual invoices during the current accounting period.
So, my topic is reversing balance entry examples. So, reversing entry. What is reversing entry? It is the last step of accounting cycle. So, kani siya, buhaton nimo ni siya. It is a journal entry nga imong buhaton at the end of the accounting cycle. So, nakabuhat naman ka og journal entry pag first mo to siya ang adjusting entry. So, at the end, ang imuha na siyang buhaton is ang reverse entry. So, kung na may mga sayop-sayop ato sa first, mausap pa nimo siya at the end of your accounting cycle. So, it is also optional. Pwede sa dili mo siya buhaton, pwede sa nimo siya buhaton. So, there are adjusting entries that can be reversed. Number one is accrued income. Accrued income is revenue ni siya nga na-earn mo but then wala pa ni siya naabot. Ikaduha is ang accrued expense. So this is the expenses that a business incurs or but hasn't paid yet. So mo ni siya ang kanang na experience na sa business pero wala pa siya na bayri. 3 is the prepaid expenses using expense method. So kani siya sa balance sheet at first i-record na siya as an asset but once ma-realize na nimo ang benefits ani niya, mahimo na ma-record na ni siya as expenses. So, ang debit your expense account, so kani siya i-debit nimo ang imong expense account ug i-credit nimo ang imong prepaid expense account. So lastly, ang unearned revenue using income method. Mao ni siya ang mga kwarta nga imuha nang nadawat in advance but wala pa siya nimo na-earn. So how to reverse the accrued income? So first, we have the adjustable entries. So sa adjustable entries, na siya interest receivable o interest income. Ang interest receivable niya is ang debit, while the interest income, mao siya ang credit. So, in reversing these entries, ang imuhang interest income, which is the credit sa adjusting entries, mahimo na siya nimong debit sa reversing entries. So ibaylo ra na nimo siya. Ang imong debit sa una mahimong credit, ang imong credit sa una mahimong debit. So the interest receivable niya is debit siya sa una, so karon imo na nimo siyang credit. So next is ang accrued expenses. So pareha ra jud siya. Na siya utilities expense o utilities payable. Ang utilities expense niya is ang debit, while the utilities payable is ang credit. So in reversing these entries, ang imong utilities payable mahimo na siyang debit, while the utilities expense is mahimo siyang credit. So ibaylo ra jud nimo na siya. Once debit na siya sa una, himo na siyang i-credit sunod. Next is the prepaid expense using expense method. So sa adjusting entries niya, prepaid rent is ang debit, while the rent expense is ang credit. So, in reversing this entry, imo na siyang i-bylo as. So, ang rent expense niya mahimo na siyang debit, ang prepaid rent niya mahimo na siyang credit. So, lastly, ang unearned revenue using income method. So, sa adjusting entries niya, service revenue is the debit, while the unearned service revenue is the credit. So, in reversing this entry, ang unearned revenue, service revenue, mahimo na siyang debit, while the service revenue is mahimo na siyang credit. So, very simple ra jud kayo ang reversing entries. From the word reversing, i-reverse ra nimo ang imong journal entry nga imong gibuhat pag first nimo sa accounting period. That's all. Thank you for listening. This is Edessa Jean Gonzalgo signing out.